The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 30th fantastic Friday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us just simply need to be pioneers of our future versus prisoners of our past. And of course, the easiest way to do that, folks, is to always remember that life happens for us, not to us. And when you and I, when we make that one little shift out there, that one little shift of life happens for us versus to us, means that you and I can find the gift in every single set of circumstances that the universe is going to throw at us. And one thing that you and I know, especially in trading these markets, the universe is always going to be throwing circumstance. And I want to say thank you to all the people that send me emails periodically that tell me how life actually happens for them, whether it's getting through good or bad things out there. So my heart is always touched by each of you, and let's make sure that you and I, we do everything we can to have an extraordinary weekend. I'm absolutely grateful for your presence here this morning. I'm here to serve you. Feel free to give us a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is Tiger Financial News Network. Of course, it's fantastic Friday. I'm Steve Rhodes. Welcome to the show. Right now, Dow futures trading up 177 points. They're trading out at 17,256. S&P futures, they're trading at 1999. NASDAQ futures off 18 points at 41.67. Goldilocks on the move this morning, up $7, trading out at 12.63. Silver up 9 pennies at 16.87. Light sweet crude back 12 cents at 44.42. Let's take a look at what's going on around the world out here right now. If we take a look at what's going on in Germany, the DAX is up 57 points. 53 points, down about 0.5%. Looks like it may hit. Did it make a higher high today? Let's see. The actual high this morning, 10,804. And the actual, 10,807 is the number. That's the January 26 high. Still trading with inside that. Nothing really bearish about the candle as we speak right now inside the DAX. So the DAX next target, 10,957. If we look at the FTSE, see what the FTSE's doing out here. Excuse me. FTSE is down about 0.4%, off 27 points. FTSE has just simply been consolidating up at these highs here, getting ready to take on its high of 69.04. It's trading right now at 67.83 or so and change out there. So nothing really significant. Now, we've got it's got some resistance at the trading session from January 27th. That high is 68.65, basically. Once it gets above that, the 69.05-ish area will become its next target. Over in Asia last night, we had the Nikkei finish up 68 points, up about 0.4%. No big deal there. The Hang Seng, as we take a look at it, down 88 points, about 0.3% out here. Really not that much of a big deal out here. The Shanghai off about 1 6/10%, down 54 points. But the Shanghai, we know that it's also gearing up here to take on its major resistance zone at the 36.03 level. Closed out last night at 33.63. Now, our markets, if we take a look at our futures markets out here, as I mentioned, you got the ES Mini. That's trading down about 19 points at the 2,000 level. If we go take a look at what it's doing, let's look at a short-term chart. Where do I have? I've got all kinds of short-term charts. Let's put the 30-minute up on our screen. So as we take a look at the 30-minute chart out here, if we go from the session low from yesterday, that came in at about between 10:30 and 11 in the morning. That price point, by the way, was 1982. So if we go from 1982 up to this little doji high that took place at 6 p.m. last night, that was at 2020. So the vision was 2020 at 50 cents as well. So 2020 50. What we'll see is so far the retracement has been a 0.618 retracement. We've got the battle of the 0.618 retracements, I believe, going on here. In fact, let me show you the other ones. Let me do this here. If we so you've got 0.618 retracement. That says if this area holds here this morning, what we're likely to see is an A to B equals CD to the upside. So that's one pattern. And let's go take a look at what that would give you as far as a projection out here. Let me go ahead and erase this just simply to make it a little bit easier for you to see. So one possible pattern is going to be the A to B equals CD pattern. If in fact the low that came in here during the 8:30 to 9 a.m. session that was out at 1995 and a quarter takes place, and what you're likely to see is move up to the 2034, maybe 2044 level. 2034, that's your 1-to-1 A to B equals CD. As I say, it is a battle between the 0.61. I believe it's a battle between the 0.618s. Let's take a look at what price did last night as we came into the time frame of 6 p.m. If we take a look at from the recent high out here, that was from January 27th down to the low of yesterday. What you're going to see is that what it did was a 0.618 retracement as it made that little doji high there last night at right around 6 p.m. So you've got now potentially an A to B equals CD to the downside. I have to say that if the lows here that came in between 8:30 and 9 o'clock this morning, 1995 and a quarter. If those lows get taken out, what we're likely looking at here is, number one, a visit down to the lows, but perhaps an A to B equals CD to the downside out here. So as we take a look at that, what would that price projection be? That price projection, this is a larger A to B equals CD. If in fact this were to take place, that A to B equals CD pattern would take you down into a price point of about 1956. Which pattern is it that's going to play out? I don't know. It is the battle, is the tug of war between the 0.618 level, and that's what's going on, at least on the shorter term basis, for the S&P futures. We go take a look at, so the rest of the market's really doing about the same. If we look at the daily charts, so let's go take a look at the daily charts, get a feel for what's going on here. If we look at the daily chart for the S&P, just so we stick with that, we can see here 1988.60, our nice TAS market profile support level. And that's the key area to be watching. It closed below that today, not so good. Of course, there's bullish support all over the board at these lows here. So January 16th low, 1970 and a quarter. That's important. I'd have to say the more important low would be December the 16th, and that's priced out at 1961.50. So even if you close below, if the S&P were to do that, close below the market profile low, the 1988, you'd really have to say the key level of support is going to be that December 16th low. Likewise to the upside, resistance, pièce de résistance, that's going to be out at the 2053 level. That's your TAS market profile high. That's been the high of the week out here. January, when did we start the week here? January 26th. We saw a high of 2055. So 2052.82, 2055. In fact, we opened up the week here in the futures. They had gapped down just a tad. We opened up the week at 2035. That's what's going on the ES. If we take a look at the NASDAQ out here, NASDAQ right now, that's trading out, futures trading out at 41.68. They ran into a resistance late last night, and that was up at that TAS profile high of 42.10. Clearing that would be positive. Clearing that would also set up an A to B equals C, potentially set up an A to B equals CD to the upside. What it's dealing with is a B point, potential B point here of the January 23rd high. That price level is 42.86 and a quarter. So that's something you'd want to watch to the upside. To the downside, you're going to watch the low here from January 16th. And that's out at 4,041. Those are your parameters to look at inside of the NQ. If we take a look at the Dow, what the Dow has been doing here, the Dow has yet to really break this descending price channel. It has support down here at about the $17,000 and change. That takes you back to the morning of October 31st. That's when we saw the markets break pretty hard to the upside. The continued Santa Claus rally, the year-end rally. Of course, Stephen looks at the Santa Claus rally is not right after Christmas, but instead coming off of the lows that formed back there in October. So 17,000 and just a bit of change is a key level of support. You've got your TAS market profile low in the 17,198 area, that too being a level of support that could, in fact, be tested today. We go take a look at what's going on inside of Goldilocks. Let's go take a look at gold. Gold's up $7, trade down at 12.63. We take a look at retracement levels out here. retracement levels from the recent. Well, where did I take this from? Let me do this again, because that seems to have shifted. So let me do this. If we take a look at retracements here, and there's two retracements we can look at for gold. I'm going to take the one from this little swing low from January 2nd. So if we look at January 2nd's low, 1168.30. Go from that low to the high on January 22nd. That's out at 1308.80. What gold did yesterday was it came down, and it came down hard right into the 0.382 retracement level. That number is 1255. We actually got down to 1252.10. Volume 150,000 contracts yesterday. Now, 150, yeah, maybe it was 100, maybe it was 240,000 contracts. I'm not sure if eSignal has the volumes here. They might be off a day or something. In any event, what we do know that we had was a wide-ranging bar coming into that. So that's the daily chart for gold. The wide-ranging bar, when you come into a retracement level, first of all, it says you're likely to head down to the next level. That next level would be 1222. That would be a nice little buying area out there. There was an A to B equals CD to the downside. It looks like here's on the daily chart, we can even identify that. Let's go take a look at that. Your A point out here being that high from January 22nd, your B point being the low of January 27th. Quite frankly, the C point's the high of that candle, but I don't want to torque my system out here. I'm not sure if it would take that. In any event, it completed at least a 1-to-1 A to B equals CD to the downside, but it did with a wide-ranging bar. When you do that, the message is that you want to go to a higher price. Now, if we just simply look at a shorter-term chart out here, we'll go take a look at a 10-minute chart, because we do have gold trading up just a few bucks. Let's go see, is there some kind of A to B equals CD pattern that had set up off of these lows out here? And looks like there was that pattern on the very short-term chart out here, starting with the price point at about 120 in the afternoon yesterday. That's when price got down to 1252.10. I'd use that as my A point. My B point out here at about a price point that took place at 7:20 in the evening last night. Little hammer candle down here on 2020. So there was the vision of 2020. What was that? That would be at 12/8/20 last night. So what we can see here is gold has made almost exactly, how about that? A 1-to-1 A to B equals CD to the upside out there. That's at the 1267 level. The actual high was 1267.50. How does that work? So you've seen 1 A to B equals CD to the upside. Here's the key. What kind of retracement have we had after hitting that? Let me just take a look at it. Let's go from this candle's low, which is right here at as we came in about 8:20 to 8:30. And we can say about that. And if you go up to the high out here, that as it completed the 1-to-1 A to B equals CD, we have seen a 0.618 retracement. So 1262, 1261.60 to be exact, simply becomes a key level of support. If price breaks below that, well, 1259.90 becomes your next target area. And then I'd have to say that if price makes its way all the way back to the 12, well, actually, that's just of this last leg out here. So if this level fails, though, what you ought to see is move down to 1259, maybe even 1257. That's what's going on a very short-term chart for Goldilocks. If we take a look at what else is going on in the metals market, let's take a look at silver. Silver's basically flat. She is trading out at, where is it? Where did it go? It's $16.84. Same kind. Let's go ahead and take a look at the same kind of patterns out here. We'll have to do that when we get back from this break. But what we can say, actually, going from its low from back here on December 1st, a big wide-ranging bar coming down. That's never a good thing. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 167, S&P down about 19 points, the ES Mini. We were taking a look at gold and silver just before we went into that last break, and what we saw yesterday was, two very wide-ranging bars coming into retracement areas. In the case of silver, actually went through the 0.382 retracement level. Now, what that fits with is, I mentioned at the beginning of the week, each Friday afternoon at 3:30 p.m., the CFTC, except for holidays, the CFTC releases their commitment of traders data. Now, it's a ton of spreadsheet data. I mean, a ton that you can sift through. Financial futures covers all kinds of markets. And in the case of gold and silver, if you go take a look at, you can look at they've got basically three classifications, but you've got to sift through the data, and those classifications being the commercial traders, presumed to be the smart money, the big money that's out there. And then they've got another category that is what they refer to, they specifically labeled as the non-reportables. Happens to be basically individual traders out there. You can glean a lot of information from that. Can't really use it as a timing tool, but it does help you to get an idea of positions being taken. It's much like taking a look at the release of who's taking positions in what equities, but all those filings with the SEC are done on a quarterly basis. So you're looking at least 90 days, well, not at least, but you're looking at potentially 90 plus days days ago. Here, you're only looking at what happened as of the prior Tuesday. So Friday's release of data is as of Tuesday's close. And I update the spreadsheet, my spreadsheets, each week, and then but it takes me quite a while to go ahead and actually turn that into a chart. But I've got ways to turn those into charts as well. At the beginning of the week, I did mention that what I saw as unusual. Not unusual, but I saw that the large commercial traders had started getting their net short positions. They've always been net short. They've simply always been net short when it comes to silver, but they've gotten it back up to levels that are worthy of a top out there. Now, that was after gold had formed a 1 to 1.272A to B equals C to the upside. And then yesterday's move lower inside of gold. Just simply an additional piece of information about what the large commercials were planning on. And silver was actually worse. The silver large commercials simply had up their net short positions to even larger levels than where the last high had formed out there. So it would not be unusual to see these lows, these 0.382 retracement levels actually crack. And we'll see how that plays out. But there is another piece of information and evidence out there. Now, speaking of cracking, let's go take a look at Amazon, because Amazon is actually going to crack above it's a little triangle out here. If we take a look at its little wedgie that it has formed. Now, this wedgie is, if we pull this back, this is a weekly chart, by the way. If we take a look at this, and this is great trend line out here. If we take a look at Amazon again, I'm coming back to a weekly chart, and that's the November 7. That's how important these trend lines are. If we take a look at the trend line inside of Amazon, going back to November, the week that began November 17, 2008. Price point was $34.68. To use that as a touch point, you can use as your next touch point the low from the week that began July 19th. That price is at $105.80. You've got a series of touch points out here, but primarily you'd use the week that began December 26, 2011. And what we know is we now zoom in on the chart out here. You can see that little wedge triangle formation out here, this ascending wedge pattern, descending wedge pattern. If we take a look at it, you can see how price, when it came down hard with volume that week that began on October the 20th, but yet what held price in place was that trend line. We saw that level get attacked 2 weeks ago, the week that began January 12th. There were 20 million shares coming down. That 20 million shares was going against 38 million shares, so about half the volume out there. And then you saw a nice little bullish engulfing candle last week. Well, what you're going to see this week, let me see where it's trading at pre-market here. Pre-market 347. Now, I don't know what's going to really happen when this thing opens up, but what I can tell you is 347 is right here where my crosshair is. And 347 breaks right out of this wedge. 347 takes you back, in essence, into this little potential supply area, this downdraft that occurred back in July, the week of July 21st, or the week that began July 21st, 2014. There were 32 million shares, though. So what we might see today, number one, we saw that trend hold inside of Amazon. And look, when you take a look at trends, it's no different than taking a look at the trend line inside of the S&P 500. If you go take a look at the S&P 500, if I put that on here's your weekly chart out here for the S&P 500. We take that back just a tad. We go to its lows out here as well. These are lows from 2011. What we know about the S&P is it also has held its trend out there. So the market's still in an uptrend. The market putting in a significant bottom. Whether it was yesterday or whether it's going to be on the Monday, that I can't tell you, but it is putting in a significant bottom. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex index banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 38 points. Trading out at 17,379. S&P off 8 at 2,013. Composite up 46. Composite up 7 points. Trading out at 46.91. Russell 2,000 off 7 points. Trading at 11.82. DAX down now just only 8 points. FTSE down just about 12 points as we speak. Gold up $6. Silver up 11 pennies. Lead the charge. The upside it is amazing. Amazon up $37, 12%, 3.5 million shares so far this morning. Biogen, BIIB, that is on fire, up 10%. That's up $35 right now. Let's see, what is that doing? Is that Biogen up at new highs on the weekly, daily, monthly, yearly, quarterly, you name it. That looks to be on fire. It looks like, they crushed their estimates. Biogen profit crushes the estimates. That's what it says out there on my screen. So gapping up this morning. Intercept Pharmaceuticals, ICPT, that's up $28 or 17%. Google's out with earnings after the bell. They're up 14. $14, up 2.5%. Visa out with, I think it was, Visa was out with the numbers last night, up 5%, up $13 and change. Costco wholesale, they're up a couple of bucks. MasterCard out with earnings this morning, they're up about 2%, up $1.63. To the downside out here, we've got Decker's Outdoor. That's off about 17%, so they're getting crushed. You got Advanced Emission Solutions down 46%. What the heck did they do out here? Maybe I don't know what they did. Looks like they got some accounting issues or something. You've got Hawaiian, where are we going? Hawaiian Tropic. No, Hawaiian Holdings. That's down 20%. I think that's the airline. That's off about $5 as we speak right now. Green Dot Corporation is red this morning, red in the face, off 14%. You've got Tuesday Morning Corp, wishing that it was probably Tuesday morning, but on Friday morning it's down 11%, off a couple of bucks and change. Have a request to go take a look. I think it was in there to look at the energy sector, the XLE. So that's down 95 cents as we speak right now. What I don't know is whether or not the individual that requested it is long, short, what they're looking at here. If we take a look at the energy sector, formed a nice little hammer candle here yesterday. That hammer candle also happened to be testing the most recent swing point, which was January 14th. That had 52 million shares. Yesterday was a test of the top of that with 30 million shares. So you had a rejection of that swing point with lighter volume out here. The key is going to be, hey, does the low from yesterday hold? 73.21. Now, in that case there, as you know, if you close below a hammer, the expression is if you're long, you're wrong. Well, the issue is if you're long, you're wrong, but then you got to fall down to the next support level. In this case here, it's going to be the swing points. You're going to say maybe the swing points from January 14th. So if we look at the weekly chart, let's go see what the weekly chart for the energy sector has done this week out here. Let's look at volume comparisons. Now, the swing, here's a hammer candle out here on a weekly basis as well. So that just shows us that that week of January 12th, that low out there at 71.70 is very important. Now, there were 199 million shares. This week, we've only done 110. So volume starting to wane down there. Not only did you have a hammer candle 2 weeks ago, then last week you had a bullish engulfing. What does that mean? That says that the market is truly trying to hammer out a low here, and that level of 71.70 is very important. If we pull this back even further now, let's take a look at this. The XLE. Let's take a look at retracements just to get a feel for what we have done off of the lows back here in 2012, June of 2012, from low to high. You're trading below the 0.618 area, which is priced out, by the way, at 76.55. A failure of that hammer says, you just moved down to about the 69-ish area. I would have to say a failure of that low, again, to give you that price, is 71.70. You're more likely to go head to 61.11 or so out there. So that low of 71.70 is very important. Let's take a look at Biogen. I mentioned they were up big. Let's go take a look at Biogen, BIIB. Again, that's trading out at 395. Let's pull this back a bit out here. So Biogen now taking on a what might have been a resistance area. That was the week. This is a weekly chart, March 17th, the week that began March 17th. Volume there was 11.5 million shares. So you're going to be up and over it with lighter volume. You've done 6.6 million shares for the week, but boy, you got a wide-ranging bar out there. And now your level of resistance becomes perhaps that high of 358.89 out there. It's not even a bearish reversal signal. So let me look at the daily chart here for Biogen. Let's go see what kind of volume today. So 643,000 shares. Last time we saw a sign of strength inside Biogen was back here on December the 2nd. That had 6.2 million shares. So even if it did 6.2 million shares today, it's still going to be light on the weekly chart. Nonetheless, it is at its highs. I do not see a three drive. I do not see a three gap play. So this does not look like an exhaustion gap. That is on Biogen, BIIB. If we take a look at Visa, let's go look at Visa, see what it's doing. Up $14, up $5.60. So you got Visa gapping up this morning, 985,000 shares so far. The swing point that it's going to try to get into is from December 26th. Okay, so the day after Christmas, 1.2 million shares. Let's go ahead and say it had 50% of the volume, 2 million shares. Well, you've already done 991,000 shares. So Visa is going to head for those highs. Head for the hills, those hills being 269.32. You're trading at 262.15. It says it's going to go test that high, maybe take it out, and then form a huge A to B equals CD pattern to the upside if it takes out that high with a volume out there. That is a big A to B equals CD pattern, but it's very much similar to the market out here. So Visa looking much like the market. The October 16th level being your A point, your B point being the high out here on December the 26th. Your C point could have been yesterday's low out there. If Visa is able to get above 269.32, it has a price projection of 319.30. That would be its 1-to-1 A to B equals CD to the upside. Let's look at some things that are moving to the downside. Let's switch over to that side of the market. If we take a look at Decker's Outdoor, DECK is the ticker symbol, up $12, up 15, or down, up, it's down $12, down 15%, and volume behind the move so far, 1.3 million shares. If we take a look at what this thing is trading into, let's see if we can figure that out here. This thing is trading all the way back into a potential level of support, a breakout area. That breakout inside of Decker's Outdoor that took place on the trading session of October 25th, that had 7.8 million shares, but boy, and it has not been tested. So 66.30 is one area to be focused on and pay attention. The next area is going to be about $58.28. Let's go out to Earl in Quincy, Massachusetts. Quincy. Earl, thanks for calling. Thanks for holding. How you doing this morning?
Good morning, Steve. Thank you for taking my call. Steve, I'm in Alibaba at $89 a share, and I'm looking for a stop loss. Can you take a look at it in general technically and also give me a stop loss, Steve?
What I can, I will. I'll give you the best that I can. You're in at 89 in the trade. Your trade target, your trade, is this a short-term, long-term? What is it that you're looking at?
Fairly short-term. It was not a long-term trade. It was fairly short-term, I would say.
Okay. First, let me give you the information of what its daily average true range is. That's Alibaba, BABA, folks, is a ticker symbol. And what I mean by that is I'm just simply looking to see on a daily basis, what does this move on average? And the answer to that question, Earl, is $2.71. So if you're in at 89, and I don't know what your position size is on the trade, but hopefully it's not over leveraged.
It's not too big. No, it's not too bad.
Okay, so one of the things that you could take a look at doing is taking $2.71 and multiplying that times a Fibonacci expansion number. I like to use 1.6. I don't have a calculator handy, but if you write these numbers down, 2.71 times 1.618,
okay.
And you put that as a stop below your entry point. Okay. Then what it's really saying is that you were certainly too early on the trade, and you want to protect your capital, and that something is wrong. Because if you utilize that $89 level as a place to buy, and however you derive to that, it really doesn't matter. And price moves beyond the average true range. It says price is going against you, and so therefore you take a look at getting out of the trade. Now, unfortunately, in the case of Alibaba, there's not a ton of information for us to look at to really be able to identify other levels of support. What we know is that its all-time low from the time that it began trading on September 19 is the price point of 82.81. And likely, if we see it close below 87.29, pretty good chance that that's where price would run down to, 82.81. So that's the other side of the question that you have to ask yourself. That's why I asked is this a long-term holding? What's your position size? And there's just, there's 16 million shares down there when it was trading. This thing gapped down, as you know, a couple of days ago, and it had 76 million shares. So that was pretty big volume coming out of this equity out here. So does that information help you at all?
I think it does. Yeah, it's a fairly short-term hold. I don't have a large position, and I had a limit order in it, and it had 89, and it got hit yesterday before I heard the news on it. Technically, How does it look, Steve? Did you say though the stock itself?
There's not enough. There's what I will say is, so one of the things that we always look for is a price coming back to a breakout, and is it doing it on light volume? In the case of Alibaba, the answer to that is no. 2, is there volume at its highs? Because if there's volume at its highs, it says that price kind of acts like a magnet, and price ought to go back there. Does Alibaba have that? The answer is no. Does it have volume at the lows? Well, not really. So, which would also act as a magnet out here on October 15th. I don't see the technical pattern that says that Alibaba is a buy because of yesterday's activity of gapping down with 76 million shares.
Okay.
So technically I would say, now, for somebody that's looking at this from a longer term holding standpoint, which I totally can get out there. What you'd really like to see, Earl, before stepping into it now, is some other kind of sign of strength. Some other group of investors that are saying, okay, it's time to go ahead and get in and start moving this thing, start marking this thing up. And yesterday, what we really had was more of, more of kind of like a mark down versus a mark up.
Okay, Steve, thank you very much for the feedback. I appreciate it.
No problem. Thanks so much for calling. Have a great weekend.
You too. Bye-bye.
Okay, that was Earl from Quincy, Massachusetts. That was us taking a look at Alibaba out there. And, I certainly can understand why anybody listening, or certainly Earl, would be looking at it. Here's a equity that's held by all kinds of funds out there. But those funds were really buying this equity on the way up. So, there was certainly some let go yesterday. There was certainly some give yesterday with 76 million shares to the downside out there. So, look, here's the deal. As long as you use stops, as long as you use stop management, good stop management out there, and as long as you use a proper position size, then you can be in this game forever. You just simply can be in this game forever, and you should be in this game forever, and you should use proper position sizing. And for those of you where that term is new, let me just give you the easy formula for it. Take whatever your free trading capital is. If it's $1 million, if it's 100,000, if it's 10,000, it doesn't matter what it is, the amount that you have. But take your trading capital, your free trading capital, not what you've already got invested in stocks. Take your free trading capital, then multiply that times 1%. So on 100 grand, 1% is $1,000. $1,000 is all you need to risk on any trade out there. Now, what I mean by risk is that's not how much capital you've allocated to the actual trade. That's how much you're going to risk. And in the case of Earl, he was asking a good question. Hey, what should be my stop? That's how you identify your position size. You're going to risk $1,000 on a $100,000 account. If in Earl's case it was a $2 stop, you just take $1,000, divide it by 2, and that says you can buy 500 shares. And if you do that, and as long as your stops don't get jumped, sometimes they do. Look, there are a lot of people whose stops got jumped yesterday inside of Alibaba. Those are uncontrollable things you can't have happen. And so your 1% risk, maybe that turns into 2% or 2.5%. It doesn't happen all the time. It doesn't happen that often, but it does happen. But nonetheless, if your stops didn't get jumped and prices moved against you, what you would have lost would have been that $1,000 on a $100,000 account. On a $10,000 account, it's $100. And if you do that, this is a math exercise. And what we're doing here in the markets, it's a math game. And if you do that, you're going to be just fine. You're absolutely going to be just fine. Now, let's go take a look at some things here that are also moving in the markets. I'm just scanning both to the upside and to the downside out here. Let me see. To the downside, we only looked at Decker's Outdoor. Let's go look at this Hawaiian Holdings, HA. I think that is the airline company. Here's one where some people certainly would likely have been, their stops would have been jumped this morning. This thing is down, is gapped down, 1.6 million shares. If we look at to where this thing last had any potential level of support, one of the first areas that we would look at would be this little slight gap up, a little small sign of a strength. We like to use these gaps because those windows oftentimes act as either support or resistance. In this case here, we've got Hawaiian Holdings trading below that level, which is 2142. Excuse me, certainly doing it with volume. In the case of Earl, who was asking about Alibaba, your eyes want to first, what's the technical look? You always want to go to, some type of high volume bar out here. Well, if we do that in the case of Hawaiian Holdings, high volume bar, not wide price spread, but certainly a lot of volume, you'd come back to really two different areas. Either the trading session from July 23rd, and by the way, that low is $13. This is trading at $20.89. That becomes a potential target zone. In fact, I would say that is likely the the target zone. I'm not saying that price is going to get down there, but it is something you absolutely have to be aware of, right around the $12.85 mark. It's doing a good job to try to get back there. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. I got the Dow's off 23, S&P is off 5, Composites up 10 points. The Russell's down 6 out here. When we began the show, we were talking about the battle of the 0.618 retracement levels. That was on the 30-minute chart out here. We'll go switch down, take a look at a 10-minute chart. So here's the 10-minute chart here for the S&P futures from the move from last night. That was down at the 1820 time frame. That was at 2020.50. From that high high down to the low out here that we saw come in at about 8:30 this morning. Remember, that was a 0.618 retracement level. And to the on this last leg from last night now to the low of this morning, what we've seen is a 0.618 retracement, 2010. Now, we did see some nice volume come in as the market opened, both from the 930 to 940, 940, 950 level. At this stage, the preponderance of evidence suggests that it's an A to B equals CD to the upside that is forming. We really won't know that for certain until we see what happens at the 2020 level. But at this stage here, 2015 is going to be the next move higher, and then 2020. If we see a move above 2020, pretty good chance of what you'll see unfold, whether it all plays out today or not, is a move to about the 2034-ish area, and that's in the ES mini, and that's how things look at the moment. With regard to what I didn't do was spend any time on the monthly chart out here. Let me do this here real quickly. Let me see if I can get over to my monthly charts here, because we are at kind of a nice important precipice. In fact, if I look at the S&P 500, so how things close today are pretty important. As you know, my call here, my belief about the markets, things are pretty bullish. I'm going to go ahead and get rid of this A to B equals CD pattern for the moment. And what I do know is when market tops are made, for example, if you come back here, let me get my cursor. This is the S&P 500, again, by the way, that we're looking at. Nearly every single major market top has been formed with this price relative strength divergent pattern. Somebody in the den asked me, do I follow the Bradley model out there? And I gave a fairly long answer as to what I do follow and don't follow and the reasons why out here. It was in my search of having the entire ephemeris, 300 years worth of data points, if you want to take a look at planetary configurations, that I could apply to any single chart. That is how I actually uncovered this pattern here. Because what I was looking for, just as you might, just kind of like Indiana Jones or, the guy from National Treasure, we're all looking for clues out there. And what I found was that this pattern here existed way more, like the consistency was like 95% compared to planetary configurations out there. Doesn't mean I don't respect them. It's just that when markets make higher highs and do it with less relative strength, and then it's followed up with a bearish reversal signal, those are real beautiful identifiers as to significant market tops and bottoms. So we do have the S&P 500 that if it were to finish here at 2017 would actually give us a potential reversal signal out here. Not potential, it would give us a reversal signal with price having moved higher and then doing it with less relative weakness. Now you have to have follow through. That means the next month. That means this is a monthly chart. That means February would actually have to have a lower close in order for that pattern to actually confirm out here. So you would get an evening star on a monthly basis, and that's if it closed right around this 2017 level. It also just means that the high of last month really becomes the significant. We are in the seasonal favorable cycle. This says that the significant bottom has been was put in for the year. As a matter of fact, we'll see how that plays out. And of course, the easiest way to see how that plays out is just to join me again Monday morning. But stay tuned, because the Nadex Bull Bear Binary Option Hour is up next with Tom O'Brien, our man Daryl Martin. Have a great Friday, a fantastic weekend, and I will look forward to seeing you Monday morning. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.